PJ, we spiced it up on X. Man, I'm so excited.
That's why I'm here, Rishab. That's why I'm here. Let's continue the fight.
Game C game. I loved it. I was so excited. I think some people might have gotten actually upset though. I was just like, God, PJ is so great. Like, this is amazing. Yeah.
I also think from what I know of both of your takes, I think you probably see I don't know if eye to eye is fair, but like very similarly, you see the world of capitalism and how like all of that plays out is kind of what I feel like based on what I see on Rashad from our conversations here and PJ from what you share on X. So yeah, I think it's funny that's like to me it seems like a similar mindset in terms of like a little bit of like capitalism. I don't want to be unfair with this, but like maximizing of capitalism and how that plays out in two very different business models. So.
Yeah, to me the point of capitalism is to drive down prices in the economy. So that's what I'm doing.
Exactly right. You create value, right, by doing that. Yeah, by definition, that's consumer surplus, right? The difference between how much value you give and what you charge is all consumer surplus. So yeah. What's your, I guess I am like really curious. I mean, you know this, but we're like the three of us are basically all totally different capital structures, right? So we're VC funded and Jeremiah's like in a PE context. And then Jack is totally basically in a bootstrapped completely context, right? I think similar. Just to make sure I'm actually characterizing it correctly. Is Judge Me entirely bootstrapped? Did you raise a little capital early on? Like, how did you guys think about company formation?
Yeah, we are bootstrapped completely. I actually have some Excel sheet from back in the day where I was tracking every expense. I put in like $8.8K US in the company. If you add up all the losses I made before it became profitable. So basically nothing. And I do believe that being bootstrapped gives you the flexibility to do things that you cannot do if you have to show ROI on everything you do. And so I think a big part of why we won in the App Store is that we make these like indirect bets that are not necessarily like spend some money now, you get some payback period in 6 months. It's more like we do things that optimize for Shopify and then we get some return over time. But if you give me $10 million or $100 million, I cannot go faster in the same thing. I can only do more of the same. And so I think it's actually a benefit that my strategy is like this, because this allows me to do things that you cannot do if you raise money. Because obviously, I mean, I was competing against like Yotpo in the beginning. I mean, now we're like everyone in different position, I would say. But in the beginning, it was really like going after Yotpo. And it's just hard to go after a company with 400 million in funding if you have no funding. So you have to be different, right? So I think it's a benefit to be bootstrapped in my case.
And
Got it.
The velocity is really interesting too. I mean, PJ, it'd be really cool to hear a little bit more about the path for you. But I remember I was a Judge Me customer in, I don't know, 2018, maybe 2017, 2018, somewhere around there. And then to see like, I mean, like I see you posting your numbers every so often on X. I'll see a tweet that has, like your ARR numbers. You back that out in terms of like the number of merchants that means. It's just a massive amount.
Yeah, exactly. But I mean, the way we look at it is, I mean, the ARR is the ARR. We can't really control it. We do try to grow at 40% per year to have rule of 40 numbers to still have somewhat of respect for SaaS metrics. We want to be not completely crazy in the SaaS world. But for us, it's always been about dominating the one go-to-market that we pick, which is dominating the App Store. And so everything we do in the company is about optimizing for the App Store, and we ignore everything else. And so I think I saw a previous episode of you guys where you guys were discussing about, is it a good thing or a bad thing that your competitors are growing? Like, I mean, our view has always been that it's good that the market is growing as long as you dominate the actual go-to-market that you pick. So within the App Store, I want to dominate. There is no number two that I allow. I mean, we have to just kill everybody off within the App Store go-to-market. But then if Yotpo grows to a sales model and expands the market, up market, that's great for everybody. That's how I look at it.
That's super interesting. What do you think it's possible for a new entrant to take the App Store? So one of the debates that we have like all the time, essentially, both internally within Format and actually on this pod also, is whether it's possible to take the App Store distribution approach now, or is it not really possible to get discovered if you're a new app, right? Like you're at this point, like you are number one, you have been you know what I mean? Like imagine if I'm starting a competitor to you today, like is it even feasible, right?
Yeah, I think there's two parts of the answer. So I think first it depends on the category. I think we've proven this model just for reviews, but I actually find it surprising how little we've been copied in other categories. Because I think the opportunity space is wide open to do Judge Me for Klaviyo, Judge Me for Gorgeous. And you see it happening to some extent. You have like Slayer doing like a much more affordable Gorgeous. You have like Most, another app, $15 a month. I mean, I see some people in my Twitter replying, I also cut the price to $15. It's happening to some extent in smaller categories. So it's still possible. If you want to go after reviews, I mean, why would you come after me to make half of 13 million? It's not really. Like spend 10 years to make 6.5 million. I don't know. It's a bit weird.
There's this guy who said that that's not successful. So yeah, I kind of agree.
I know, that's crazy guy, right? But then the other thing I would say, I mean, the downside of this model, I mean, because we are, of course, providing way more value than we charge for, is that you have to be very disciplined internally on the organization, because I can get away with not doing much. I can go sit on the beach for 6 months with the entire team, or my company can become very bureaucratic, and it will only show up after a while, because it's kind of a trade-off, right? If you like maximize the price of your software, the market will tell you if your sales and marketing campaign is good, because if you maximize the price, there's no consumer surplus. You have to always put all the effort in sales and marketing, but you get the market feedback. If you minimize the price, you actually can grow for free and take the market like we've done, but you have to stay disciplined. You have to be almost a bad cop yourself on the organization, because otherwise they can just become slower and lazy and just become a bureaucracy that takes up all the consumer surplus. So it's kind of like pick your own poison. Now, I prefer to be product driven and have this like high consumer surplus approach and low pricing and take the market. I think it's more sustainable. I think it's a better position to be compared to a Yotpo and Judge Me. I think we are in a better position to take the entire market eventually. It's easier for us to go after them than for them to go after us. But it's not without a trade-off. There is a trade-off of the organization having to remain efficient, even if things become easier and easier as you scale.
Do you feel like that's gotten harder as you've scaled, keeping the organization efficient?
Yeah, I've been trying now for, multiple attempts to like sort organization, because to me it's like playing the defense. I want to play the offense. I like to be shit posting on Twitter and just doing things like this. It's much more fun trying to like be the bad cop on my people, And so we tried EOS, that didn't work. This entrepreneurial operating system that wasn't decent enough for our organization. I think we're a bit too complex for that. I hired a CEO for 10 months. That person also left now last month. So I'm back as CEO. And so now the next attempt is going to be make our own like founder mode tools and try to make everything in software, all the rules in software, so we can have the automated accountability. But yeah, it is what I feel is holding me back, because we have many ideas to do beyond reviews, but I feel like, at this moment, I want to make sure the organization stays efficient enough as we scale to multiple things before I do multiple things.
PJ, obviously I don't know your organization, but one thing that we have done that we have found to be successful over the past 4 weeks, and I'm curious to get everybody's feedback here on this, is we've started to run daily stand-ups by like pod. So at our company, we have like an on the go-to-market side, we have like an SMB, mid-market, agency, and enterprise pod. And I just have like a 15-minute, other enterprise, I have a 30-minute stand-up, but the other ones are all just 15 minutes. And then the rest of my day is clear, basically, to like get stuff done. So I have like an hour 15 of stand-up in the morning. My co-founder has a little bit more because he runs the engineering teams. But it's basically like the whole company is running on a daily stand-up. And I mean, the amount of like self-fulfilling accountability that has flown into the system since we started doing that 4 weeks ago has been incredible. But it has its trades, which is like mid-level, like people who are mid-managers. So like it flattens a hierarchy tremendously when you do something like this, because like as the CEO, you can be sort of like directly aware of what's happening. So the place where it introduces risk is like your management layer. Some of them may like it, may not like it, react differently. because they're not used to it. So it has a lot of risk in that regard. But otherwise, from a pace perspective, I found it to be very effective.
Do you, with that model, because I think there's a way to do it where you're just listening basically and asking questions versus dictating the things that actually get done. Like, is that kind of your approach, or are you actually like pretty like leaning in and being like, hey, why aren't we doing this? We should do it sort of approach?
I want to say that I do the former, but I'm just going to be honest. Yeah. So
it's so hard in a context like that not to dictate.
Yeah. But also, I would say companies need an asshole in charge. You need somebody to dictate it. I mean, most things. It depends if it's actually top level important, right? So, I mean, if we're gonna choose which feature to develop next, I'm not involved. It's pure tactical. The product team can decide. But if it's about enforcing all the factors that go into strategy to stay number one in the App Store, I'm gonna come and dictate it to you. If you try to increase the price, good luck in my company. Like, it's not gonna happen. So, yeah, you have to be top down. To be, I guess, aware and explain yourself when you are top down for a good reason and when you're not. But also, I do also believe that sometimes entrepreneurs know things without really knowing why they know it. So I think just gut feel also is important,
Right.
Yeah.
It's sort of like an aggregate of everything that you know, right?
Yeah.
People say, hey, you shouldn't make emotional decisions or decisions of your gut, but your gut is what you know, right? Put together.
Exactly.
You said so many things that I find interesting. You said grow for free. To what extent do you think that Judge.me hasn't been responsible for its own demand generation, getting people interested in Judge.me because you're on the Shopify App Store?
We've been zero responsible for our own demand generation because we've literally done product and support only for the first 9.5 years of the company. We're now 11 years old almost. We had no marketing team. We have one now since 12 months. We still have no sales team, and we've just optimized. We basically asked ourselves, okay, what would Shopify want us to do if, like Toby was sitting in the meeting all the time, what would Toby want us to do that is maybe not in our benefit short term, but is in their benefit long term? And our strategy is basically tactics that we don't do, that we would want to do for our own quarterly optimization. Let's say we want to increase the price. If we could get away with it, we want to become an app suite. We want to do maybe less support to save some money. But we do things that make us the ideal partner to Shopify and gives them the incentive, their personal incentive, to put us at the top of the App Store. Even if they don't like me personally, they still want to put me at the top because it's their benefit. And that's how we think of it. And so our strategy is basically, what are the least amount of things we can think of that all together gives an incentive to Shopify to put us at the top? Because we all start from the idea that the App Store is a power law. Being number one is 3 times more important than being number 2, and it goes down very quickly. So basically, you have to be number 1 or nothing. And actually, in that way, it's a very conservative strategy, because I think it's too risky to raise the price, and because then the risk of losing the App Store ranking is too high. It's too risky to become an app suite. It's too risky to do less than 5.0 support at scale. And so in that way, I'm very conservative, but then at the same time, I'm also pushing the organization to be very risk-on if it doesn't matter for the App Store ranking. If it's about, there is some legal risk, whether our contractors in the employees, just go. Like, it's just like a fine or just a small, like one-off cost, just go and risk it. And so that trade-off, that's basically what I'm doing all the time, like managing that top-level view of what we're actually about and enforcing it in the company is what I do.
That's really interesting.
Yeah.
Yeah, I feel like when I think about the product-led growth side of things, a lot of the time these teams are trying to provide demand to it's trying to provide supply to the market's demand. But you're actually thinking of what is it that Shopify wants us to provide to Shopify users.
Yes,
right?
Exactly. And also, I mean,
PJ, can I?
Go ahead.
Oh, sorry. I was just going to ask a different question. Please finish your thought. Yeah.
I mean, I just want to stress that, I mean, I think what worked so nicely about Judge.me is that because low cost we defined as a reason that Shopify really prefers at the top of the App Store, and I can explain why that is if you want me to. We then also found a way to execute on a strategy without sales and marketing, which saved a bunch of expense, which we then could pass on into more product for less money in the App Store. So it all kind of was a virtuous circle. And it was such a simple company to run because we just did product and support. We didn't have any finance team, any marketing, any sales team. It's drastically simpler. Now I have a marketing team, I have a partnership team, I have other things as well, a finance and ops team, because we're betting on new things for the future that are beyond just being an actual review upon Shopify. But yeah, it's much more difficult now to run the company. And so keeping it simple, I mean, it's exponentially simpler if you have less things to do in a company. Because I look at it as like a weak link game, like if you do like 5 different things, the weakest part of your 5 things you have to do is your overall output. It's like a water pipe. If one part of the pipe is very tight, that's the maximum you can put water through the pipe. So the less things you have in the pipe, the easier it is to maximize the pipe. If that makes sense. And so I think if there's anything genius about Judge Me in the first 9.5 years, is the things we didn't do. The fact that we found a way to do this with just product and support. And then we ignored the fact that we had bad UX. We ignored the fact that we had no sales and no marketing. And we looked a bit, like maybe, like for some shops, we looked a bit weird. We had no website, actually, no actual website on the homepage until 1 million ARR. And we had a very bad looking website until 10 million ARR. It's only now, since 6 months, that we have a nice looking website, at least I believe so. I hope so. So I don't know. I think the clarity of the clarity of the things we could ignore was probably the most important thing.
How do you think about future investment? So now you guys are, I think the last public number I saw was 13.
Yes.
And so that's like, let's call it $1 million a month.
That's correct.
What is the way that you think about investing? Like, how much of that is keep the lights on for the existing business? How much of that is new investments? And then in the category of new investments, whatever you're willing to share, which, by the way, if you want to say like, hey man, there's a set of things that I don't want to share yet, that's obviously totally fine. But whatever you're willing to share at whatever level of granularity, how do you think about allocation going forward? Because that's a meaningful amount of capital that you can allocate now.
Yeah. I think always first things comes first. So we're always going to make sure we keep winning the first level of our strategy. I mean, basically, I think a good company is built on secrets, right? And our secret was basically that we aren't a SaaS company. We're a Shopify app and we optimize as a Shopify app, right? Because the things we've done don't make sense as a SaaS. It does make sense if you think what Shopify wants. And then we did that and that's how we won. So that was our secret, as in that we knew this ahead of the market and that's how we won. We've got 2 more secrets that we have in mind that we think are true that the market doesn't realize yet that we're investing in now. This I will keep secret for now, but I mean, it's going to be obvious, I think, after I share. But basically, I will invest in those 2 extra secrets to the extent that I can, if my organization can handle it without losing focus on winning number 1. If I lose the App Store ranking, like this like the foundation of level 2 and 3 for our strategy, like I can't have this. So it's always, I mean, it's like stacking the bricks, and the first brick has to stay solid, otherwise it makes no sense. That's how I look at it. I'm kind of annoyed that it's going so slow, but I think we all think that in our companies. But so, yeah, I wish we could fix the organization like permanently with like the right set of software to just, okay, now it's good enough. Now we can invest fully in brick 2 and 3. But yeah, I'm trying to do both at the same time. Fix the organization.
Why not isolate the teams? What is the approach so far? And which parts of the approach are working and not working?
It's not that we have to isolate the teams, because we just only have 1 product team, by the way. We have only 1 product manager, only 2 designers. We only have 1 team, really, which is also on purpose, by the way, to keep it very simple. We think it goes exponential complexity if you scale people. We don't think it's necessary. But for us, it's literally my gut feel whether we're ready to have a second product team doing a second secret, a second product. Because I think we need maybe 3 or 4 product teams in total if I do all the ideas that I have for the next stage. But at this moment, I would feel that it wouldn't run as lean and as efficient enough as good enough on its own without my micromanagement every day. So therefore, the best way to keep the focus in the company is to keep the company small and just focus on the one thing we know we can do for sure and just keep that up while fixing the organization on that. And then we can replicate into more. That's how I look at it. So again, it's actually very conservative in a way.
Yeah. One thing that Stu, and I promise I'll stop asking. One thing that Stu, who was on last week, mentioned to us was he's trying to reinvest 100% of revenue back into the company. And as a bootstrap founder, and I'm happy to share how, like, being venture backed, I think about these questions. But as a bootstrap founder, I have to imagine that that's a pretty non-trivial decision, because you have to decide how much of it do you want to invest in enterprise value for an eventual outcome versus how much you want to take in distributions for ongoing sort of like whatever lifestyle you want to live or whatever that might be. How do you think about that equation for you? And the reason Stu's, and he's very open about this, the reason Stu does that is because he has a separate business which happens to cash flow off of which he's living the lifestyle that he is happy with, right? And so this one for him is enterprise value maximizing. And so I'm curious how you think about that equation and that balance.
Yeah, I mean, we reinvest almost everything. So revenue-wise, we grow a bit over 40% a year. So there's already rule of 40 covered. We also make about 10% profit. So let's say rule of 50 in total. But my goal is always to make rule of 40 with just the revenue growth. And we reinvest everything because to me, there is no choice. I mean, we do have this strategy with these 5 factors, and we do have to keep investing in more software so we can keep number 1 spot in the App Store. We added compliance last year as a 5th factor because compliance was such a big deal to Shopify last year. And so we keep investing in more and more, and then trying to get the company ready to do in the new business units for level 2 and 3 of the strategy. And so I can see a lot of opportunity to keep investing everything. I pay myself a small amount of money compared to the revenue. I mean, I pay myself $200K per year if you really want to know in pounds. So it's barely anything. And so, all the money stays either in the company or gets reinvested. And by the way, we also pay 25% profit tax on a marginal pound of profit. So to me, it's a subsidy to reinvest faster. So
it's interesting too, because the way you've built this business, there's if you ever want to sell it, you will not have a hard time selling this business. So there's that aspect as well. Or you get to a certain point where it's okay, now we can set, let's say we operate at a 20% profit margin instead of a 10% or 30%. You'll get to a point where if you grow it large enough, the return to you is going to be so big that it doesn't matter what you're taking at now. And at least that's kind of the way I feel.
Yes, that's true. But at the same time, I'm also turning 40 next year. And at some point, the future has to be now also, right? You can't be ever 10 years in the future.
Sure. Dude, PJ, we're the same age.
Mm-hmm.
What do you know? Yeah, 86 born.
Yeah.
If you wanted to move out of the UK, I'm not sure on the laws in the UK for getting your business out of the UK for tax purposes. Would it be too complicated at this stage?
To move out of UK with the business? Well, I was in US again for a couple of weeks just last week and the week before, and it's just more energy there. I wish I picked US to move my company to 5 years ago, but at the same time, I really believe in having one office and everybody in the same room. Again, I feel, well, if it was just me living here in UK, I would move to US tomorrow. I do love the team that we have, and I want to make sure this works. And again, once the company is organized better and I have more trust in the founder mode system that we have, we can potentially deal with a second office location. And I'll probably pick LA or New York then, we will see. But again, it's not it's one of those things I would want. If I could magically have my office tomorrow in Santa Monica, I would prefer it. But it just isn't now, and it is what it is. And so I don't think it's the most important thing for me to worry about moving. It's for me most important to keep winning the exponential in the App Store, right? Because I mean, maybe more fundamental, I think the point of a tech company is to win something exponential. You have to have some power out that you chase, try to be number 1 in. So that's all that matters. Even if you have to live in a place you don't really love anymore for a while, so be it,
Right, but it would free up so much capital, right, to put back into the business, right, if the UK isn't so friendly for taxes.
Yeah, I mean, it's fine. We can still deduct R&D. I think it's coming back in US now, so it's still okay on that front. We get some R&D credits, but it's just whole attitude and mentality in the company, or in the country. Sorry, everything is going bad. The economy stops growing. There is this malaise. It's just not nice. I mean, even the sunshine is less than in New York or LA. So
Right.
PJ, I'm curious about you're talking about the Shopify App Store and that being a lever for you and the thing that you're owning. I'm curious what categories you think that it's possible to have anywhere near the outcome that you've had, because I don't know, in my opinion, I don't know that there is one outside of reviews where that's even possible. There are apps that are the banner on your website app, right? That I bet maybe does $1 million a year in revenue, if that. There's other things out there where there's apps that are basically won a certain category. But even for me, with no on the survey side of things, more than 90% of our revenue comes from discovery outside of the App Store. Like the only way we exist as a business is where we're kind of creating a category is by actually investing in marketing and sales and doing those kinds of things. If we had just relied on the App Store, we would be, I don't know, I'd be like myself and one other person probably trying to run the app, which would be fine. But like in 5 years, we would have not made it very far at all. So I'm curious how you think about that.
So, okay, the first part of the question was which other categories? I mean, look at the top categories in Shopify. Number 1 is email. Number 2 is reviews. Number 3 is, I believe, help desk. So I would say those are the top 3 ones that I would consider doing this strategy in. And so I really believe the email side, the Klaviyo side is, I mean, somebody has to take the market in a Judge Me way. Hasn't happened yet. I think it's a massive opportunity. Klaviyo, on like the Gorgeous side, help desk, I think CommSlayer is attempting to do it. I think it's starting to work. And then there's also smaller categories. So that's one answer.
If you're the founder, sorry, can I ask a somewhat personal question? If you're the founder of CommSlayer, shouldn't they just be calling you and saying like, hey, I'll give you 5 points, tell me what to do?
But I think what I'm doing is pretty obvious. I actually explained it all in a talk in like Toronto. So it's our strategy is actually very simple. As soon as you realize we just optimize for Shopify instead of ourselves, everything becomes obvious. And so I think, I mean, you can copy me for free. You don't have to give me points in the cap table. So it's fine. And I think actually the CommSlayer guy comes quite a bit to our events in London. We know him. He's a nice guy. I wish him well. But in general, by the way, about things we're doing, I think one under-realized part of looking at the App Store ecosystem or Shopify ecosystem is that I think you're best off doing things Shopify has done before but hasn't tried to monetize. That's what we try to do. So Shopify had a review app. Shopify had an email app or even has an email app at the moment, but this is not key revenue driver for them. So of course, if they make money with it, like let's say with like Shopify Capital or like Checkout, you don't touch it with a 10-foot pole. I mean, this is like not to be touched at all. But if it's something big enough for them to care to make something, but put like a second-rate team on it because it's not like really a core driver for them, these are the best opportunities, you know? So things like review app, like email solution, maybe even some like network for like warehouses because they had it, but now they don't have it anymore. So basically, in a way, Shopify gives us the IDs and we look at Shopify, what they want us to do, and we just do it better. The things that for them are secondary, but for us are primary. And then so, I mean, the only thing that is not in that logic that is still maybe worth doing, I would say, is help desk. And you can also then look again, which companies did Shopify invest in? There's another way of looking at it, right? So they invested in Gorgeous. So maybe doing the Judge Me for Gorgeous is a good idea because help desk is important enough for them to invest in. So, I mean, there's some ways of looking at it. I mean, you can make a small app making 10, 20K a month and doing something more small, like, I don't know, printing out some random small app. But to me, that's not appealing. But if you look at big categories, I think it's very limited. But it's also obvious once you understand some things.
And I just really think there's only a handful, like the 3 you mentioned.
Yeah.
There's those. I don't like let's say you
maybe shipping also. Yeah.
What's that?
Shipping. Something with shipping.
Yeah. But I think if you wanted to do what you've done, like if somebody wanted to say, hey, I want to build the Judge Me of this category, I think there's only a couple of other categories that you could even get to 10 million ARR doing that.
Yes, but they are still open. Like it's not like everybody's done it 5 years ago. It's still open right now. And you can say
interesting. I mean,
it's only 13 million after 10 years, but you can still sell this at a nice multiple. It's still like life-changing money if you bootstrap this. So, and to me, it's kind of crazy how people look down upon the opportunity. But you do have to be able to think in a Shopify app way, not in a SaaS way. I really think most of the mistakes happened in the App Store in the last 10 years is basically people coming in thinking this is a SaaS opportunity. But it's not. This is a Shopify app opportunity. It's different.
Jeremiah, I think the one counterpoint to what you're saying is the Aliyah guys, right? Like he was on too, remember? And I mean, that's like, but they do market. I just want to be clear. They are not following the same approach as Judge Me. Like they are marketing like crazy. In fact, it's just that they're good at the organic style of marketing, so they don't have to like put that much capital behind it. But they went like Aliyah, ALIA.
Such a funny business. I mean, it's similar to what you were saying, PJ, because they took Shopify forms, something Shopify is not paying attention to. But they didn't just take Shopify Forms. There was another pop-up app that MailChimp acquired. What was it
dude,
called?
this company, the market insertion was perfect. Okay, I forgot the name of the other company, Jack.
It was Amped. Yeah. So MailChimp acquired Amped, and then Alia were just like, okay, no one can use Amped anymore. We'll just make Amped for everyone, right? And they crushed it.
They just literally. Yeah, I mean, I don't want to denigrate it. It's not like actually copying, but there was a company that filled that space, and then that company went away, and they were just like, oh my god, there's this vacuum here, and they just like filled it in like, I think in, what is it, 18 months, 24 months, they hit 5 million ARR, completely bootstrapped.
PJ, you should have seen the landing page. It was literally Amped, just redesigned with Alia, and everyone's like, oh, Alia's here, right? The website looked exactly the same. It was incredible.
It is definitely a different playbook though, and I don't like their pricing model is so different, right? Like I just looked at the website.
Yeah, they charge a lot.
Right?
Yeah,
the list price goes up to $2,500 a month. So, like, I don't think, like, let's say my guess is very little of their revenue comes from the App Store, and to grow on the App Store, I think I don't think that happens with that pricing model. I think it has to come from elsewhere.
Can I also say, if you want to dominate the App Store, you have to do all the use cases for the entire market. You can't just be like, oh, we care about the plus stores, we care about the best stores in America. Like, we do a lot of features also for drop shipping from Thailand, because these are a lot of people. They may not make any revenue for us, but if you want to dominate the App Store in a category, you have to serve everybody within the category. And so basically, I'm trying to make it very easy for whoever writes the algorithm in Shopify App Store, in Shopify site, to be like, oh, there's any search for reviews, let's send it to Judge Me because they cover everything. And support is always good, the price is always low, compliance is always high. Like, you do just everything right. And even, by the way, staying within just reviews, not making an app suite, not doing loyalty, etc., is also part of the value prop to Shopify, because they want merchants to go to the App Store to find the next app and to mix and match as they please. And therefore, we just integrate with everybody. But obviously, we could make easy extra money to do loyalty. But then also, again, I also want to provide my competitors a way out. I want to provide them some safe haven to run to not fight too much with me, right? So they can go up market, they can go into suite like you're doing, Jeremiah, to be honest. It's good for me, like, and you guys can go there with different go-to-market, you can innovate, and if something is really amazing, I can always look at it and consider doing it myself. But so that's how I look at it. But for me, staying within reviews is also part of the value prop to Shopify.
Well, and on the flip side, like, I have zero incentive to try to compete against you. Like, there's no
point.
Yeah, but yes, but that's only because I say that I will stay low market and I will stay within reviews. If I would come after everything you do within like a month, you would go fight that with me.
But I still wouldn't try to compete.
It's to run that you do this.
Yeah, I still wouldn't try to compete on price though. Like, it's interesting. Like, I think, PJ, one thing that's interesting, and obviously, like, I inherited Stamped. There are a lot of things that I'm working on changing. And so this specific thing I'm about to mention hopefully will not be this way soon. But literally, our infrastructure costs to support our customers, like, we spend more than you charge your paying customers on that infrastructure. So that needs to change. Like, that's obviously a problem. But, like, if somebody comes to me and says, why don't you just charge $15 a month? The answer is, I literally cannot do that. Like, it is, like, we would lose money just on the AWS bill and the other pieces associated with that, without accounting for team and all those kinds of things. There's just
we also lose money on the biggest customers.
Yeah, and I'm sure you're losing money on your biggest customers.
Just hosting is more than $15 a month for some customers. But again, the benefit of staying simple and having this $15 a month pricing to us outweighs the $5 we lose on a customer.
Totally.
Plus, and the stores also tend to be copied by their competitors, so there's some flywheel effect as well. So that's
what happens is when you charge, I'll just pick a number. Let's say if you're trying to charge customers $500 a month, you don't have to optimize your cost profile in your business the same way. And so you have spent 10 years optimizing everything to be cost effective and efficient. in a way that you just aren't thinking about if you're charging $500 a month instead of $15 a month.
Yeah.
And so like that's the part that a lot of people don't understand is software is not like, it is not as cheap as you think it is unless you've invested millions of dollars in the people and the time that they're spending to optimize these things and make it more efficient.
I agree.
And so like you've been doing that, obviously. That's the only way you can be charging $15 a month is to do
That's
that.
true. I always tell the team that our innovation is not on the product side, it's on the go-to-market side. It is our ability to give it away for so cheap is the innovation. Because the API is roughly the same between Yotpo, Stamped, Lux, Judge Me. I mean, it's a commodity category, in my opinion. I mean, yeah, I can explain you how we did some things better than you guys, and you can explain the other way around. But like fundamentally, it's the same software, roughly. For us, it's the ability to provide at scale with amazing support at low cost. That is the innovation. And that's indeed
Yeah. And that is far harder to do than most people realize. And it doesn't happen overnight. It takes a long time to be able to do that.
Yeah. But to me, that's a hard problem. But once you figure it out, it feels more sustainable. And I feel more secure in that position than to always bet on out innovating the price challenger. I actually love where we are in the market. I think it's a very comfortable space. Like the only enemy is myself or my organization becoming lazy, but like, over time we will go it's easier to make for like even larger stores at $15 a month. You already see it. I think last year we were the app with the most Shopify stores with more than $1 million in revenue that were like adding us to the stack. So even more than Klaviyo. So this was new for us to be so popular in this segment of the market, above $1 million. Anyway, to me, it's great news. For example, the Shopify is going even more up market. Again, it's great because it allows Yotpo and Klaviyo and all the other players to go even more up market and hopefully leaving even more of the market to me from a low end perspective, right?
Okay, I have a question for you because you've been talking about how you are optimizing for what Shopify wants.
Mm-hmm.
There is a potential counterpoint to this, which is that Yotpo, with a much smaller number of customers than you, is generating over 100 million in revenue and is paying Shopify. I don't know what their structure is, but presumably they're paying a significant amount of that in rev share. Shopify is making far more money off of their relationship with Yotpo than they are off the relationship with you, even though you have more customers. Yeah. So there is a avenue here where, let's say you went and you took the entire reviews market and you cut that, I don't know, it might be 200 million in reviews revenue that you don't manage right now across the whole market. If you shrink that down to 20 million, that actually has a negative impact on Shopify's revenue. So how are you thinking about that?
Yeah, I mean, our strategy of being low cost depends on the idea that Shopify wants to commoditize their complement, which is a very standard strategy in technology. So the idea is that, I mean, to some extent, a shop can only pay so much for all the software that they use. And then the idea is if Shopify wants to maximize how much they can charge for their part of the stack, they want to make their complements, which is the App Store, as affordable as possible. So yeah, the money they lose in the short run by getting less revenue share from me actually helps them to charge more for the core plan of Shopify, where they can charge 100%, not take 15% revenue share. So if they understand their own strategy well, they will prefer me to be low cost over having more revenue in the review category, right? In their ideal world, all the apps are free and are amazing, and they can charge all the willingness to pay on their own for doing nothing. That's the ideal world. And so if any company wants to either, you want to own the complement, you want to own the marketing channel or whatever, or you want to commoditize it. And so Shopify's incentive is to commoditize the App Store, commoditize payment gateways, commoditize capital, in like Shopify Capital. So that is their objective. And we're just aligned to the objective. But of course, if some bean count in Shopify thinks short term, yeah, they may not like me. Right?
Yeah, that's a really good point.
I think, yeah. I'm trying to think about the way to say this without getting into trouble.
Take your time.
I think. Take your time. Well, the good news is you're here, so at least one person is.
I will
in front
take
of
the
me.
worst quote of this entire interview and put it on Twitter. Trust me. Be careful,
dude. I love it. what little I can see, I think that Shopify is continuing to promote and highlight the approach that PJ is talking about over the short term one. Yeah. And that's like from like outside looking in terms of like all the sorts of, you can like look at their earnings calls, their leadership changes, like all sorts of different things. You can kind of like watch that pathway, and it's becoming increasingly clear that what PJ is describing is exactly the path that they are walking down. In terms of like, trying to make every application a commodity as much as possible, because, and in fact, anything that was like too much revenue, they ended up shedding. Like, again, I don't know because I'm not there, right? But they tried to buy Deliver and they tried to buy Flexport, right? Yeah. And those are like real revenue businesses with a revenue that does not look like payments revenue. And they ended up not continuing that and instead partnering with them, right?
Yeah.
And
sorry, go ahead.
Oh, I was going to say, I can bet you anything that there were people internally who advocated very strongly that they should be pulling in that type of revenue and having that type of business.
Yeah.
And that Toby probably was like, hey, this is actually not aligned. And now that we have it and we've had it for a year, like it's very clear that this is not aligned.
To me, the core logic that Toby needs to use, and probably, I mean, he knows this, is that do you think eventually you can commoditize this business? So, for example, they now partner with Stripe for the payments in Shopify. But to me, they have to get going with commoditizing as well. There should be like 10 providers in like Shop Pay, and then people can choose and mix and match, and they can have maximum competition, because now they make one payment gateway the kingmaker. It's crazy to give all the data that they generate to Stripe. So same thing with Capital. I believe it's one provider in the backend of the Shopify Capital. I'm not sure about this 100%. Again, to me, it's a good like temporary solution, but eventually you either want to be the own capital provider or you want to have maximum competition. Like making one third party the king in this category is almost the worst of all worlds. It's only okay if you believe it's only temporary. And so I think their strategy or their incentive to commoditize everything is furthest along in the App Store. But I think you should apply it to everything else, all other complements they have. It's not only apps, right? It's also capital providers. It's also payment gateways. It's also everything, So they should think, how do we commoditize payments in the world, or own
They're for sure. PJ, they're for sure doing that. Again, this is the type of thing that can get me in trouble. I have no idea. Okay, I have no idea. I want to be really clear. But think about the fact that one of the first modules that they made available to enterprises is Shop Pay, which is basically a consumer module, which means if you own the consumer interface, you can route to the back end however you want, right? And so once you own the routing logic, that's the first step.
Yes.
And but you want to do that only at the point at which you actually own enough of the surface area, because yes, of course they own the surface area for the people who are already on Shopify.
Yes.
But they need to actually get enough coverage on the rest of it.
Yeah.
Yeah.
And then you can exert exceptional bargaining power, right? Like that's the way these things work.
Correct. It also means that the riskiest partnerships that Shopify has right now are those temporary exclusive ones. Like Stripe isn't meant to be exclusive forever. I mean, that isn't in their incentive, right? Eventually, there's going to be some renege on this deal, right? And so it's going to be very interesting to see. I mean, it's all going to be in the benefit of Shopify in the long run, but there can be some like tension in the way there, right? Because of course, Stripe will want to keep the deal forever the way it is. But Shopify now having grown so much and being so dominant, they actually want to renegotiate. And maybe they are getting paid more money in the backend already. I don't know about the deals of the term, but if I'm analyzing Shopify, what is the biggest risk to them? It's the Stripe deal, like 100%.
I am very certain like their deal with Stripe is probably incredible, right? Like they're doing, I'm sure Stripe, if Stripe is smart, they're doing everything that they can to reduce the incentive for Shopify to try to do that.
Yes. But if you're
clearly missing something.
Right, you're trying to get into this market. You want to do a deal with Shopify, right? And you want to become one of the 10 providers, Anyway, I think it's very interesting, but I do believe, eventually Shopify wants to be this connecting node of everything, the backend with every sales channel, every payment gateway, every app, every whatever. And they make all the money being the connecting node that you cannot replace. And it's a great strategy, and they're going to win. They're going to go for the global win. And so if anything, I hope they keep thinking bigger and bigger and not slow down and become bean counters. But I think
I'm totally missing something here. In this end state where all of the apps are commoditized and nothing costs anything, I think that it's obviously good for the market. Saturating supply is the best thing that you can do for the market, for the customer, because it decreases price and it encourages innovation. Yes. It also encourages innovation, right? As the margins get squeezed by you, the incentive to compete with you is extremely low. The incentive to do something better that provides supply to emerging market demands, like what Stamped or Yotpo is doing, is very high. So I can't understand, I'm clearly missing something, why they wouldn't want a thriving app ecosystem where there's actually a very real incentive for builders to make something incredible, which over time maybe becomes a commodity, right? But if everything's free and there's no reason to build on Shopify, you don't build on Shopify.
No, they actually want both, right? No. They want innovation. They want people to find new go-to-markets, invest in those, have higher revenue to pay for that go-to-market that they pay for, and the innovation on the product side. But then they also want people like me to come in and say, what of those things can we commoditize and then do that maximum speed? So they want best of both worlds. And this dynamic is happening right now.
Even just looking at the reviews category, there will always be merchants that are willing to pay 20 times, 50 times, 100 times what PJ would charge them. Because there's something that makes sense to them where they say, I want this one thing, and I think that this one thing is worth something. So there is still incentive to go build innovation for those people. It's just that over time, like that cohort shrinks, and there's less of those people that want to invest in that regard. At least
even more, I actually want this to happen. I want Stamped and Yotpo to keep existing in that form, because it's like outsourced innovation department to me. I can look at what the market is doing and get inspired by it. So it's better for both of us, honestly.
And then you could say, we just going to copy this thing, and it costs you.
I'm trying to say it without saying it. So yeah, once it becomes standardized enough and it's obvious enough that it's something I can commoditize, I will do so. But you want both sides of the coin. But the thing is, within the App Store go-to-market, there's going to be one power law winner per category.
Yeah, because Jack, the other problem is like, I don't think any of us are saying zero is the commodity price. It's just some low commodity price number that can be supported by a given distribution channel. So like said differently, like the other complexity PJ has is he can never win a store that does not buy through the App Store. Just like he can win everyone who buys through the App Store, he can't win anyone who does not buy through the App Store. Because those other channels, like, people are going to be louder than him, just like he's the loudest on, well, not never win, right? Like, people make choices in all sorts of crazy ways in B2B, but I'm taking an extreme purposely. It's like, if you are a App Store buyer, the probability that you don't buy Judge Me is like very small. If you are a enterprise buyer, the probability that you buy through the App Store is very small. Right, like these things kind of like everything works the way that you expect it to work, right? And so then the strategy becomes very clear, both for everyone, for the PJs of the world, for the Yotpos of the world, and for the Shopifys of the world, right? And then you can like create this dynamic, which honestly like benefits Shopify long term big time.
One thing I would put as a side note here, it's all true what you say, but we do get also word of mouth from the fact that people are like, hey, this is free money basically to go to Judge Me. And in Facebook groups, forums, we also get word of mouth there. So it's that plus the App Store. But yeah, beyond that, like we cannot compete on Facebook ads or Google ads. We don't even try. We never did. The only thing we paid ads is Shopify App Store ads, just again, to please Shopify. It's optimized for them, not for us. Right?
Yeah, PJ, all I'm trying to say is like, no one on your team is going to fill out an RFP.
Exactly.
Right? Like,
unless
and so that is a channel. All I'm trying to say, like, what is that?
Maybe if the AI can automate it soon, then we'll do it, but not if it's human effort. It's not worth our time.
This is the type of thing where like kind of like rubber meets the road on like channel market. Like, I mean, you said it really well, like channel market fit, product channel fit, whatever you want to describe it, right? So
and honestly,
go to market. Go ahead, sorry.
I was the buyer that wants the RFP honestly doesn't want to pay $15 a month either. There's also that aspect. Like there is an element of if not that Judge Me is a very good product, so I'm not saying this is going to happen, but like if there was some sort of issue with Judge Me and the mid-level manager that made the decision to buy Judge Me, their boss comes to them and says, "What's going on here?" And it was $15 a month. They're gonna be like, "Why did you go with the $15 a month thing?"
It's high risk for the person recommending it. Yeah. So our ideal customer is their own merchant, their own business owner, and they will save the money and they can go lease a Porsche with the savings.
Yep.
That's an easier sell than you taking risk to your CMO or CEO recommending us. 100%.
Exactly. Yeah. And so there's always going to be pieces of the market like that that are just like, they're going to go with a more expensive option.
Yeah. But can I highlight here that Yokpo did cut their price recently a bit. So I do believe these two sides are getting close to each other, and over time they may merge actually, right? So we're also watching that because we are trying to get like high rent with $3 a month plan. At the same time, Yokpo is cutting the price, so it's getting closer and closer. So we'll see how it goes in the future. That there is a potential that even big companies won't pay $10,000 anymore for software in the future. We'll see.
Guys, I'm dying to know, Rishab, hearing everything that PJ is saying on his philosophy and ideas around pricing, where do you think the difference is, in your opinion?
So sadly, Jeremiah was right. I was hoping for way more spice, honestly, because like I like different points of view really challenge your thinking. You know what I mean? Like you want a different point of view because you're just like, why haven't I ever thought of it this way before? But to be totally honest with you, I actually agree like 100% with everything that PJ said, which is kind of, I mean, yeah, I have the same view of the market actually, right? And how the market is playing out and how the market will play out, which is, by the way, the amount of shit I got on Twitter, I'm like a little bit irritated because if all they did was listen till minute 3, they would have heard that, but whatever. Yeah, that's like the reality of the situation, right? Is that like all of these are just strategies and most business owners are playing a certain strategy. Now, I think there's a separate question, which is like, okay, if I believe that, then why am I not doing that with Fermat? And actually, PJ is exactly right, which is like every business owner is going to take a different approach to like cracking open the market and then creating that surplus in a different way. And like the approach that we took, I would call it to be much more similar to the approach. Look, I'm not at all as good of an entrepreneur as Elon or anything like that. But what he did is he started selling a Roadster at an extremely high price point and then just like built a ton of tech off of the ability to reinvest from selling something at a high price point early on. And then you just compress the price yourself very fast over time. So if you were to look at our price history, like literally 18 months ago, you would see us in market quoting $6K a month. And now we're all the way at like a couple hundred, right? And like we are doing this to ourselves because I actually agree with how the market plays out. I think that how you approach it in the meantime is actually the only thing that changes, right? Like each of us sees the market the same way. And I think you just take different approaches. Yeah. Like what PJ said is like, hey, you charge more in order to invest more in sales and marketing and blah, 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 blah. But ultimately, the price of the product is going to compress. Like that's what's going to happen. And so you should be the one compressing it yourself. Yeah.
Yeah. But your model only works if what you're doing is so new that you're the only one who can make it in the early days, right? It's like you're the first one to make like a LED TV or something. Then you do this strategy. You're the first one to make a Tesla car. Then that's when you do this. Like I wasn't the first one to make a review app. Like everybody can make one. So that's why we entered differently. Yeah.
Exactly. What's interesting, I'm trying to put myself in the shoes of like Rishab's ICP, and there isn't an amount I wouldn't spend if it significantly improves my business, right? This is like,
dude, but that's how we got away with it in the early days.
Yeah. Can I also say, by the way, yeah, about reviews, in our customer development, it's pretty obvious that a lot of merchants think that a certain amount of reviews is good enough. So it's not as important to be like squeezing every single review out of every email you send. Well, for example, in email marketing or everything about driving bottom line directly, it's much more important to the last incremental improvement in performance, right? So being a commodity is easier in the review app space and in the email marketing space. I still think, by the way, you can make a Judge Me for Klaviyo, but you're going to have a harder time convincing larger stores that there's no performance downgrade moving to you. While it doesn't really matter, I mean, we are optimizing for conversion rate as well, for collection rate of reviews, but even if we are a bit lower for a while because we had less resources, it doesn't really matter compared to Yotpo, because most companies are good enough with like, I got 50 reviews from a product, it's fine.
Yeah, it's not worth
really
paying 10 times as much for 2% more reviews.
Exactly.
Hey, PJ, I'm sorry, man. I got to drop, but this was incredible. Yeah, cool. This was incredible, man. I really appreciate you doing this.
We can fight some more time, don't worry. We can find some other thing to fight over Twitter. We'll fight. I'm also disappointed. I was here like preparing for there was like zero prep, zero questions told to me. It's like, this is going to be a fight for an hour and it's a good conversation. I don't know what's happening. Anyway, it was nice meeting you.
Oh gosh, what a world.
Thanks for joining us.
Hey man, it was so nice. All right, see you.
Cool. See you.
PJ, I actually have one more question for you. I'm interested. You were talking about the opportunity on Shopify, and you mentioned email, reviews, help desk. And I feel like there's a big difference between the players, the main players in that space on Shopify, right? Email, Klaviyo, or maybe there's a couple other players, but mainly Klaviyo. Reviews, Yotpo, maybe, at the very high end. Pop-ups, Alia, shipping, ShipStation. There's a big difference between all of these different players, and some of them are very big. And that's that they exist outside of Shopify's ecosystem as well, right? Do you think that you could serve more customers, more people, by having a fraction of the market penetration that you have on Shopify in a different market?
You mean a different go-to-market within the same vertical, or a different market entirely? What do you mean?
Yeah, in a different market. So like if we look at Shopify, not the Shopify user, but that market as in where customers go to buy, right? Being the Shopify App Store. If you existed in...
Yeah. So talk about maybe combining different go-to-markets, being on the App Store, but also doing other things as well. That's
different
the
sales
question.
channels, yeah.
Well, I think it's very hard to combine go-to-markets. You have to always make sure they're compatible, right? So, I mean, for App Store go-to-market, you have to be low cost. If I want to optimize for, let's say, Reddit ads or Facebook ads, I would want to adjust the price of my app compared to what works best for those campaigns. I can't do both at the same time, right? So therefore, we decided, because we're already on the App Store go-to-market train, we can't also be on the paid marketing train, right? And so, yes, I would love to combine go-to-markets, but it's hard to combine. And also, again, being so low cost, if I try to sell to a big enterprise and I'll be like, oh, it's now 10,000 a year just because we do custom SLA or something, you'd be like, yeah, but you're charging me 10,000 more for one feature, for one thing, and it's $15 a month for the rest. I think I'll have a harder time selling my software, it being so low cost for 99% of the market, to then like charge the same enterprise price for the small 1% of the market. That's also the reason why, by the way, Yotpo went higher price, because it's easier to ask for $50K per year for a review app if everybody pays hundreds of dollars a month, right? So again, I think there is a path dependency in how you pick your go-to-market, and I wish I could do all of them together, but the reality is I cannot. And then one side benefit of not doing everything is that I do allow my competitors to take their spot, and we can be coexisting without too much fighting, you know?
Right.
Look at it. Maybe Jeremiah, you have a different point of view. I don't know, but that's how I look at it.
No, I agree. I agree with that. I think I mean, honestly, even for me with we have flat rate pricing. There are brands that we actually do not want to serve because it's just too expensive. And sometimes we'll pitch somebody they're asking for something that's kind of outside the standard of what we do, and we'll say, hey, that's $1,500 a month with a 12-month contract, if you want us to do that for you. And usually they say no, because they can get the list price is $300 on that. But the reality is, it is not worth my team trying to execute on that for them if the price point isn't 5 times higher. So yeah, I agree.
Yeah.
You mentioned something, BJ, earlier about being the app that had the most stores over $1 million last year, this year or something. Is there any plans to serve those people more with something else, a different product?
Well, it is our plan to serve as many people as possible within the constraints of our $15 a month, right? So if tomorrow we can have an AI salesperson for free running the show, we will go up market more, you know? But then you will see the opposite of the world going even more enterprise. You know, they'll go run away even more off market. But we'll see how the technology goes. With going multi-product, yeah, we do have ideas for the second and third secret of our strategy, the second and third bets that we want to make. They're more innovation than before. It's no longer just copy pasting something else. But I will share later once it's in motion. But again, I'm also not happy where the organization is right now in terms of like being self-managing enough at a high enough performance level without me always being there to trust going multiple products. I mean, I really prefer to make sure I keep the one thing going perfectly rather than risking it all by going 3 things at the same time. So.
Oh, that reminds me. I'm so sorry. I have one more question. It's what is the founder mode and the automated? I think
the founder mode is this idea by like Brian Chesky from Airbnb. I think he gave a talk last year at Y Combinator, right, in Silicon Valley. That was a private talk, but he talked to all the YC applicants of that batch, talking about the realities of running a big company at scale and how he found that by following the standard advice of hiring managers and trusting them and then basically letting them do their thing, that didn't work. And he ended up always having to come in and come fix things after they went wrong, and then actually get associated with being the bad cop that always is associated with like problems, and as a founder, you actually get a bad reputation. And then he found that actually by forcing the team to tell you about everything and being everywhere all the time, early on, you actually prevent problems, and also you actually become part of also the good things in the company. And so when Airbnb went down, like I think it was 80% or something like that in COVID, because there was no travel, of course. He used that opportunity to be like, we're going to go founder mode now on the way out. And now his life is way better. And so that idea of founder mode started there. And I think it is the future. I think it's the only way that as a founder, you can have more than 5 or 7 reports and still manage it. As long as you have software to help you stay informed and automate your enforcement of certain rules you want to put in place. So that's my current bet. I mean, I can't say it's working yet because I'm still starting on it, but that's the new COO of the company is basically software. That's how I talk about it.
Nice. That's how it's looking practically in your business, software COO. Nice.
Yeah, because we used to have EOS, this standard, like you just pay some advisor and they come implement EOS for you. That didn't work. Then we had this experienced Amazon GM that became our CEO or CEO. That didn't work. So now we're going to try founder mode. And I do think the future of CEOs is to have more reports. At the moment, I have like 12 or 13. So it's too many to put in one meeting every week. So we stopped doing that. But now we have these like groups meeting in coherent parts. I mean, the product and design team meets together. The marketing partnerships team meets together every week. And the ops side and the support side, whatever. I'm in all these separate meetings, keeps up to date. And then all the cross communication we need in the company is now going to happen through software or through like monthly demos where everybody shares what they've been doing. So it's all very new, but I think that is more sustainable than hoping for these middle manager humans to do it all for you. Because in my experience, they end up having too much power after a while. And also they have a natural tendency to become the good cop and only want to do the nice things and give the raise and do everything. And then forcing you, if you have these standards, to come in over them and do enforcing the bad cop stuff, giving you a horrible reputation. I mean, part of my team, when I came back as CEO last month, was actually scared of me coming back. We had to do like all this talking also, because look, the goal is not for me to be harsh on purpose. I want the bad cop stuff we have to do, like the accountability to be automated and impersonalized in software, so I can be more like a neutral person to them, or maybe even a good person to them, rather than always having to be there only when things go wrong.
I couldn't agree more. People do protect their reputation with their teammates at the expense of the priority, which is the business, right, and its health. I've seen, and I've worked with a lot of different teams. I used to have my own brand, then I used to have an agency and worked with a bunch of different agencies. And some of the agencies that I worked with were very good at managing teams, and they just didn't have managers. I can kind of explain to you a little bit of what it looked like, but it was basically receipts. The same reason we turn up to this call and everyone reliably turns up to calls unless there's a anomaly, is because there's total transparency and accountability. I am fully accountable to turn up to this call, and it's totally transparent. If I didn't turn up to this call, you'd be like, okay, Jack's not here, he's not meeting the expectation. So some of the teams that I worked with that nailed this, they built some sort of change log that was externalizable. Like everyone had access to the change log, exactly what they were doing, but concise. You don't want like a list of all their clicks, right? Or time tracking or some nonsense, right? Because that's too much detail that the signal gets lost in the noise, right? And then also a list of what they're going to do next, right? So I think that this is actually why the stand-ups work so well for Rashab, is because he forces everyone to, one, think about what they're doing, build a plan for what they're going to do next, and then make totally transparent in the context of a call exactly what they've done, right?
And even Toby, I think in his last interview on, what's the name again, this product podcast, I've got the name now, I'm blanking, but anyway, he was talking about how our technology and how to organize ourselves is probably something that can really improve. There's so much like waste in how we organize companies, and yeah, I think rethinking that is going to be a massive unlock of productivity. And I think software and AI and just technology in general allows you to have a wider reach as a CEO and be aware of more things easier, not have to rely on humans as communication APIs.
Right.
So yeah,
that's a good saying. Communication APIs, right? I think that there's this natural tendency in teams to lean towards comfort as opposed to challenge, and people being challenged is how they get better and they do better, right? And people being comfortable is how they get worse over time. They might be comfortable and enjoy being comfortable, but they're not going to do good work and they're not going to become better.
Actually,
right?
I'm actually writing this founder modes memo for the team with all these tendencies I see, and there is indeed a tendency towards comfort. There's also a tendency towards extroversion, by the way. We're a very introverted company. And then if you look at this bell curve of extroversion, the most extroverted people keep asking me for one more social, as if it's going to fix introverts or something. And then we end up providing breakfast multiple days a week, and then we do like social at 5 p.m. There's always one more social is going to fix it. It's a minor thing, of course. It's not going to ruin a culture, but there's these tendencies towards some extroverted like theater kid taking over the culture, and so you have to stop that. There's a tendency for people who want to have a more easygoing lifestyle to start running the norms rather than the people who want to really excel. And so you have to keep adjusting and keep fixing for that and making sure it doesn't happen. But yeah, I think once we define those things that we see in the company going wrong naturally over time in an organization, we can make software to reinforce the fix that all the time continuously. And it should make running a company easier for me, and it should allow me to go multi-product. That's the hope. Or even just not having to do being the bad cop all the time. That would also just increase my quality of life,
Right. Right, because you want the people who work for you to like you, right? Because then they're a little bit more motivated to
it's
work
hard
for you,
because
maybe.
Yes, you have this balance. I mean, you want to enforce the right standards, but also you want people to be able to speak their mind to you. If they're so afraid of you that they won't speak their mind, they become yes men. That's also not good. So you have to have both, Yeah.
I agree, man. Awesome. Well, thank you for joining, man. This was a great conversation.
Thank you so much.